Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. It is Monday, and welcome to today's recap. We definitely had a very eventful day. Came in this morning, futures are down. Little follow through to Friday's close below that 1897 in the SPX. Basically, market tried to rally and couldn't. Most things were too weak, from oil to the banks to high beta tech, and then I left to go to Bloomberg to do my segment with Alex Steele. Hopefully, you didn't miss it, and if you did, I'll post it later. And I was on my way home. I'm like, ooh, the Dow's down 400 points, not missing anything. I was kind of a little upset that I covered my shorts because usually I don't wait long or too long, and then all of a sudden, boom, get back in. Dow's only down 320, and then it's only down 280, and lo and behold, they gave a pushback to some of the shorts. My thoughts were we have to at least test, 1812, or perhaps break through it, or we're going to hold above. So today they chose to hold above, so this way, anyone who was pressing shorts at the lows got squeezed, and anyone waiting for perfect longs might be still waiting, like me. But I think, we're going to probably revisit these levels again, so, it is what it is. But for the day and for the trade, if you made money today, congratulations. You look at the chart of the spiders. Okay, basically, I'm trying to figure out, does this look like the prior, like right here, does this look like the prior double bottom that we saw back last year? Remember this low right here? You came up, failed, came back down, gave you a higher low, and then took back the 8-day, and boom. Here was your low. This was your 181.02. Then today we put in a higher low at 182.80. It doesn't mean that we're going to get a rip-roaring rally to the upside, but sometimes a move off the lows like that gives you a little bit more follow-through. So you'll see if tomorrow, it fills this gap a little bit, and it might even be able to push up to the 8-day before reversing down if it wants to. So the question is, what could you have seen, if you were trading intraday to catch the reversal? So let's go to the 5-minute chart to see if there was an igniting bar. And I would say there was a few igniting bars that failed throughout the course of the day. This one went, failed. This time we went lower, and this time look at the size of this one. All right, so this igniting bar put it back maybe in the game to make another move. This one didn't really amount to much, and then this one a little bit bigger, a little bit wider, then gave you this bull flag to position in for what wound up being a bigger move, right? If you would have missed this one, you could have been a buyer here if you thought we were going to rally in the 184 area, added once it cleared this 184.50, and then went as high as 186. So about $1.50, pretty calculated if you missed this igniting bar. And I'm sure you could probably see the same thing in the Qs. So you go to the Qs, see if there was an igniting bar. There were a few of them today. Okay, this one failed. This one came up a little bit, failed, and this time this one came up, reclaimed on the 5-minute, the 8 and the 21, gave you a decent bull flag, same way the spiders did. Okay, and this time you could have been a buyer, I guess, versus like 95.70, tier 1, tier 2, and then and then sold somewhere into that move, and then it held okay. Question is, are these things going to get any traction and go a little bit further? This looks like a pretty big bottom tail, okay, and usually a tail like this could give you a bit more upside, especially when it broke levels. This actually broke already, the 2016 low. So, like tomorrow, the way I would write it is this, okay? It all depends on the futures, right? If the futures are down 7 or 8, I would say, futures are down 7, 8 after a big reversal intraday. See if they could hold higher and go above today's high tomorrow to fill a portion of the gap. The way I would say with the Qs, so you understand my logic and my writing for the Redler All Access Note, and even in Twitter, I would say, Qs were very oversold, big afternoon move. They're down 25 cents. See if they could hold higher. You go to the chart. I would probably say you go back to the 5-minute chart. I would say, support 1 would be where they took off from. So see if they could hold above, just say this low here is 95.50-ish. If they could hold 95.50-ish, maybe you get a little bit of follow-through above the high of 97.05 to fill the gap and maybe even retest, at some point the old support, which could be resistance halfway into that bar. So that's how I would look at it. Anytime, just like something's up 4 or 5 days in a row, you're not looking to buy it. The same thing when something's down 4 or 5 days in a row, you're probably not looking to short it like the high beta tech names. Doesn't mean they're easy buys, but at least today, I don't think anyone was shorting, Facebook and the Google and the Amazon and the Netflix, because, those were really oversold. Question now is, do they get a little bit more of a rally, and should you have taken them home? I did not take anything home. I came in short, made decent money with it, and wasn't ready to reverse yet. Here, you now have a point of reference in Facebook, a little bit of a doji. I guess see, where it opens tomorrow, kind of push above this and get into resistance, or, could you trade it versus that? That's probably the thought there. Google did get your green bar. I talked about, perhaps buying it around the 200-day. Well, it didn't get to the 200-day, but it did get below this prior pivot and reclaim it. So some people probably made decent money and maybe are long a little bit of that. Here is your push, your false breakout on earnings. So if you sold it there, you had a little bit of a spot to maybe buy. Nothing so compelling. Amazon was a bit heavier. Didn't even go green. Below the 200-day, so it's more technically broken than a Google. Little spot here. Maybe it fills the gap, goes a little bit higher. Nothing to write home about. LinkedIn was kind of strong early on and never really, had any traction. If you want to see on the 5-minute how you could have made good money in the beginning, a lot of guys in the chat room did it. There was a little bit of, I guess there was a Citron article talking about how there would be a buyer, et cetera, et cetera. And this was your quick reversal right there. Did go hold sideways and gave you a move above the prior resistance. So yeah, not the easiest thing, but it did go pretty fast when the market tried to rally from 109 up to 114, and then this potent wide range bar that engulfed this entire range could have got you out of the way, and then it never bounced again. But this type of stock, when it's violent, you can go with it. Look at the size of this green bar, saying, it's hanging in there, gave you 4 points, and then the size of this bar could have said at least sell a third or a half, because who knows what happens next, and then it never reclaimed anything by staying in the bottom third of the range since that. So that was that. As far as what helped also lead us off the lows, the XLE, nice little candlestick there, did not get close to the lows here, so perhaps that means something. Here is your new range. Remember when you had your move and you had a new range here, and it kind of navigated it until it broke? Well, now it's a new range here, so you'll see what type of action happens. This is the low end of this range above the pivot low, so that's okay. XOM definitely led things a little bit. Look at that, trying to reclaim the 200-day. CVX was strong also. I don't know what that means, if you should be just buying them, but I've been just watching it. If it helps with sentiment, pretty decent bar there. Apple was stronger than most tech. I don't think that means a heck of a lot. It's still broken. It's still below the 21-day. Maybe at some point it could get above that. But it's also above last year's flash crash low. So, it's still trading above this 92. On down days like this, maybe they turn on the what's it called? The buyback machine. We'll see. It's still broken, needs time. But for today, it was strong all day, so it gave you a trade. Microsoft, I think Sperling was all over that. It actually closed below the 200-day. Maybe it's trying to come up. It's been annihilated since decent earnings. So you'll see what goes on there next. I got to run today. I got to keep this tight. Basically, it looked as if we were going to close on the dead lows and retest 1812, maybe even pierce below it before yelling on Thursday. Instead, a few igniting bars came across the board. Things closed off the lows. Does it mean that the low is in for the year? No. But does that mean if you were short things for the last 5 or 6 days in tech, maybe you cover some so you could short higher unless you just sit there and watch a trade? Does it mean you could have caught a decent bounce and maybe take a third home just in case there's follow through? Yes, but with risk comes reward. If we gap up, you get rewarded. But if we gap up and you don't own it, you can't be upset. So you pick which side you want to be on. So at this point, it's only Monday, a lot of week left. Hopefully a decent day. Half the battle is having your levels being strategic. So this way, when things move fast, you can execute. Have a good night.